Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, I'm going to do it a little bit different tonight as it is late, and I'm just going to do everything in one video that I'm watching. Wasn't watching the market today as I'm currently traveling, settling into a cabin in the White Mountains of New Hampshire. Got a beer in one hand and an elk in the other hand and my mic in front of me. Things are good, very grateful and appreciative of life at the moment, but we're going to look at the overall market. We're going to look at gold, what else? Miners, oil, natural gas, some of the MJ names, and we'll end it with some cryptocurrency because I'm in some crypto trades as well. Fortunately, the internet is astoundingly fast here, so that's good. So where we stand on the S&P 500 and where we left off last, we saw a big bull move and we were very overextended on the hourly time frame just in the sense that we had not consolidated. We had some more information this morning as far as the official whistleblower report being released. And that led to our hourly consolidation that we knew we were due for. We then saw the bulls turn around and towards the end of the day had a nice run. But as soon as we were unable to break the high of the bull move from yesterday, we saw a little sell-off at the end of today. So guess what we're forming? Our good old friend, the equilibrium pattern of a tightening range where we had the high of the bounce yesterday, the low of the pullback today, and now it looks like we're forming a lower high. So we're going to watch for this tightening range to give us a break. If not tomorrow, then certainly Monday. So the key levels that we're going to be watching, 296.63.70 and 29.89.80. That's the more important level for me. And it shows up as a daily inside bar. So if you want to keep it simple, we're just watching the day's range today to see whether it's a bull break or a bear break. If it is a bear break, we're going to head back down to our recent lows, and the door is still open for the bears to prove to us that they have strength and momentum. And again, what I need to see is volume. That is the most important indicator for me for the rest of this year. Can the bears show up with volume to form a weekly trend change for the bears, or is the volume going to be not so bad and are we just going to form a weekly equilibrium, or can we break that hourly pattern bullish and increase the odds as we head into October that this is a potential little cup and handle with a bull flag? So again, what is the most likely scenario? I don't know at this point. In my opinion, the least likely scenario, in my opinion, is that we drop down and break the August low and lose the weekly uptrend from here. In my opinion, if we are going to lose this weekly uptrend, it will likely have to result from an equilibrium breaking bearish. I don't think we're just going to head straight down and break this support level on this pullback. So in my opinion, that's the least likely scenario. The more likely scenario is an equilibrium, and the middle scenario would be a bull break to a new all-time high. Again, one thing that I will never do is lock myself in on an opinion, because every single day we get new information, and to lock ourselves in while we're being presented with new information is a very stubborn way to trade. So looking at Qqq, hourly time frame, same thing. We can take off extended hours just to make it a little bit more clear with our low, high of the bounce, magnet broke, high of the bounce, higher low, and looks like a lower high set at the end of the day. So the range of today is going to be key. It's a daily inside bar. The financial sector may give us the first clue because it has multiple daily inside bars. It's tighter than everybody we just looked at. S&P 500 and Qqq not as tight. So once we get a break, we're either testing the low or we're headed back to the recent high. So tomorrow, it's worth watching all of these sectors. Again, these are the most important things that I watch every day when I'm trying to gauge a direction for the market. Because if we see XLF break this inside bar bearish, that increases the odds for me that Qqq and SPY will break its inside bar bearish as well. If it breaks bearish and Qqq breaks bullish, then I know things are going to be choppy. And that tells me don't trade as much today as far as day trading goes because things are going to be choppy. So what I want to see every single day when I sit down on the computer is I want to see SPY, Qqq, and XLF all going in the same direction, all breaking key resistance together or all breaking key support. As far as day trading goes, I don't care which direction it is. I just want clarity. And when we have one sector at the high of the day and one at the low of the day, that's when things are less clear for me. Looking at gold. Gold is building a base of support, and we have a nice tight pattern. Let's see what it looks like on the 4-hour. I like it better on the hourly. So a little bit more details here. 1500 is the clear base of support that has a double bottom, and 1512 is a clear double top of resistance. We're patiently waiting for a break of this range. If we get a bear break on the daily time frame, or on that hourly time frame, then we're heading back down to our double bottom at 1483. If we get a bull break, then we have a tightening range forming, and we could condense it to the 2-day time frame, because if we get a bull break, we're looking back up at 1535 as a key resistance level. So I'm keeping an eye on these miners because I feel that the miners are going to continue tightening their pattern. We were starting to look at bear miners as we were approaching our resistance level, because again, the least likely scenario was that the NUGT bulls were just going to V-shape to a higher high. The most likely scenario, due to the size of the pullback, is an equilibrium. So now that we've topped out and set our lower high and we're pulling back for that higher low, we're looking for a play off of 2811 support. And tomorrow, if we were to start weak, I would be watching for that higher low to form. Hourly RSI in oversold conditions, if we do drop down tomorrow morning, and the 4-hour RSI wouldn't be far from oversold conditions. But the bottom line is I would expect a higher low compared to 2811 and for this range to continue to tighten. Dust is the same thing. We were keeping an eye on Dust for a playoff of 567. We got that higher low, but now we're looking for a lower high compared to 866. So our focus shifts back on NUGT and the bull miners for their higher low to form. We eventually get to a point inside these equilibriums where it's not worth it to me to be looking to play, and it's just hands off until we get a break. And once you get more comfortable with equilibriums, it's easier to play within them. And while you're less comfortable and learning, it's best to just wait for the tightening ranges to break. Oil is still not changing the 4-hour trend, but it is setting up for the potential of an inverse head and shoulders pattern on the 4-hour time frame, where we have a left shoulder. This is our head. And if we pull back here and hold the low of 55.40 and then break the lower highs and get over this exponential resistance, which has rejected the last 3 bounce attempts, that would be a 4-hour trend change that would have us zoom out and look for a tightening range. We would look at the 2-day time frame, and we would look for a lower high to form, or you can look at a daily. We would look for a lower high compared to 63.33. If we can change that 4-hour trend, there's plenty of resistance levels to look back to. Pretty much it's going to be 56.83 is the first hurdle, 57.01, and then we're looking up at 58.70. Every 4-hour lower high is a resistance level that the bulls are going to have to get over, and step number 1 is changing the 4-hour trend and getting over this 4-hour exponential resistance. Natural gas is continuing to pull back on the daily. So we lost that 251 support, which was a bearish signal. At this point, we pulled back over 2%. Actually, more like we pulled back 4% from that level. Our resistances are being set on these lower highs, 2596, another one at 2542. We're looking down at the low of 2394. And at this point, this weekly consolidation is starting to tilt the scales towards more probable to remain in a tightening range, or to form a tightening range, as opposed to, so this is what we would look for, as opposed to a continuation move. Is continuation possible from here? Yes, absolutely. But again, the market is all about probabilities, and every little lower low that we see increases the probability of a weekly tightening range and decreases the probability of a weekly continuation move. We have not confirmed a weekly trend change on natural gas. Yes, it was a very nice bounce, lots of profit to be made for the bulls, but until we confirm this weekly trend, we have to be skeptical of the bulls, who have been in a weekly downtrend for months and months and months, and almost a year at this point. So we broke resistances, but we have not seen the higher low and higher high. MJ space, a lot of bears out there, and I was baffled last night. We had the vote go through in the House, so that's good news. We knew it was very likely to happen, and the vote results tell us that. So like I just said, the market is all about probabilities. The probability of that vote passing was very high. If the probability, let's see, so the probability was really high, which means the market can adequately price in the most likely scenario. If that was a 50-50 vote, the market would be unable to price in the results well, and the market would react to those results. But because it was a landslide, the market knew that was coming. Not 100%, but it knew it in large part. So when I saw that vote pass, it was great. We got a lot of Republicans on sides for the yays, and essentially what it boils down to now is, with that amount of Republican support, we have what? This is off the top of my head, so correct me if I'm wrong, but I think 53 Republican senators, 45 Democrat senators and 2 independents. We need 51 votes in the Senate. So if every Democrat votes yes, independent, let's say we get one of them. I don't know who the independents are off the top of my head. That's 46. We would need 5 Republicans. Judging by how many Republican congressmen and women voted for the bill, I think that's very doable. The question is this going to go to a vote? Will Mitch McConnell allow it to go to a vote? At this point, it is all on his shoulders, and he's called himself the Grim Reaper of not putting any Democratic bills to vote, and that's a possibility. With where we stand in this sector right now, if it passes the Senate, the market is not pricing that in as a likely scenario, so we would see a solid bullish reaction if that were to happen. There's some people on Twitter, Todd Harrison, saying that he has a reliable source saying that the vote's going to come before Thanksgiving in the Senate. I have no idea. It could definitely be much longer than that. We have the whole impeachment thing going on now as well, which could delay things. So it's up in the air. If it doesn't pass, and if Mitch chops it down, this sector is going to get hit a decent bit. I think the reaction would be more significant to the upside if it passes than to the downside if it doesn't, because in my opinion, the market is anticipating the more likely scenario is that it does not pass the Senate. So again, all about probabilities in markets. So we have a lot of bear flags on both Canada and USMJ names currently forming, but I was baffled last night when the vote went through and then I saw that the Canadian MJ names were up 4 to 6% after hours. And I was standing there scratching my head. I had no idea why that was happening. In the end, it turns out that was a great opportunity for the bears to pounce on a gap up open. We know gap up opens are for selling, especially when the rationale behind that gap up open is not making a whole lot of sense, especially in the sense that, you see a name like Cron or CGC gapping up open. They have access to capital. They have billions of dollars of investment. This bill passing doesn't necessarily directly benefit them. You could make the argument that acreage would be more likely to go through with CGC. Others have debunked that and said that the SAFE Act would not allow acreage to go through the deal with CGC. I don't know the full details on that, but the bottom line is that gap up open was very easy for selling and pretty easy for the bears to jump on the open this morning. So same thing with USMJ. What I was wondering is, okay, this is surprising me that Canadian MJ is up 5%. Can USMJ do something with this? Is this going to be a surprise to me that the market was not ready for this? And are we going to see some retail FOMO? So in the end, we watched the first 15 minutes, which is the most important, because we see higher opens, and the most bullish scenario from a higher open is to see profit taking initially from those that are going to lock in those gains, and then a new high of the day after the first 10 to 15 minutes or so to show sustained buying and pressure on shorts. I'm still not convinced that there's a ton of shorts. I know the short data says there's a lot in the USMJ space. Personally, I was trading penny stocks, as I've said many times, for 4 or 5 years. I never trusted that short data. And why I didn't trust it is maybe not a good reason, but just the fact that every single penny stock is pointing to the reason that their stock is in a downtrend because of the short data. When in reality, it's convertible debt, it's dilution. And for that to be the narrative that every single penny stock talks about, the short interest and highlighting all that, it diluted it to the point of it being meaningless to me. So we didn't see any kind of short squeeze action. We saw higher opens and we saw profit taking. And it was very clear after the first 20 minutes, there's no mojo here. And even trying to sell, again, it's the same thing on the OTC. I bought positions in IAN yesterday and Cureleaf yesterday, and I sold those today. As soon as I saw the first 10, 15 minutes of trading, I said, nope, no mojo. There's no retail or there's no money period coming in to buy. There's no significant buying pressure. And so selling becomes really hard. Those 5 to 10,000 share lots that I was selling, it gets to the point where the OTC market makers, I see a bid and I say, okay, there's no momentum. I'm going to sell my shares into that bid. I place a limit order on that bid. As soon as I do that, the bid and the ask change and they make that bid disappear. They put my shares on the ask and then it just drops down. And it was very frustrating to try and sell. So I sold some in the morning. I left some positions. Fortunately, I left some sells on the ask. And fortunately, we did see most names in the afternoon make another move back up towards the high of the day. OH got a new high of the day. Cureleaf came close to the high of the day. So those knocked out a bunch of my sell orders as well. But it was just me taking the small profit in the end. No big gains, nothing like that. It was just me recognizing, okay, I set myself up for the potential of a solid bull move, solid gains if we did see any kind of notable reaction. Waited to see if there was a notable reaction, didn't see what I wanted to see, and then bailed on those positions. So I exited the vast majority of my positions that I entered from yesterday, and in the end, we're still weak. So let's look at Cron and Cgc. We have bear flags on the daily as a possibility. We're watching the hourly uptrend. We have support, really, let's see, extended is on. So we've got low, high of the bull move, 24.10 is our higher low. If we break 24.10 tomorrow, the odds of a daily bear flag increase significantly. 22.76 would then be on watch. Cron is a bear flag. So we're looking at the low of yesterday, and if we break, or the low of today, if we break 925, we're looking right back at 893. Gauging by where we stand on the weekly and daily RSI, I'm definitely going to be interested. If we break 893 and see another leg down, I'm going to begin scaling in for an oversold bounce, depending on what the hourly, 15-minute, and other RSI levels are. You know, just breaking 893 doesn't mean I'm instantly going to be buying, but it's going to be at the top of my list as things to be watching for a longer-term oversold bounce. Other than that, USMJ names, Cureleaf with a daily inside bar. Nice bounce, but no follow through. We were range bound all morning. So looking at on the 15-minute time frame. Here's your higher open. Here's the initial consolidation. Lower high, higher low. We did get a bull break. We couldn't break the high of the day. And as soon as we break one level and cannot break the other, that led to further profit taking into the end of the day. We tested the low at the end of the day. Bulls tried to save things, and they didn't do a great job of it. A nice upper wick. If we closed up there, that would have been a different story. But in the end, we're still looking down at the low of today, tomorrow, and then the low of the pullback, 853 and 844. OH, again, nice move. And there was opportunity to exit positions established yesterday, but no follow through. Bulls have to hold 601 tomorrow and break 663 to change this hourly trend convincingly and try and get follow through. So there was a little bit of FOMO in the chat room with response to this, saying, okay, Canadian MJ is doing 5% after hours. What's USMJ going to do? Should we buy at the open? Is there going to be FOMO? And the anti-FOMO is the daily chart, knowing even if there is FOMO and a 20% move on this news, we are just looking for daily lower highs. No trend changes are going to take place on this move because of how weak we have been. And of course, the fact that we anticipated the gap up open in the Canadian MJ names would be for selling. That would also be downside pressure if there were any correlation, which there is. Roughly, correlation comes and goes between the US and the Canadian MJ sector. But the fact that we expected Canadian MJ to sell off from the gap up open was just adding another point in favor of the bears for USMJ from the open. IAN and MedMen today, the past however many months we've been pointing out, MedMen longer than IAN, but it's probably been maybe 4 months for MedMen having red flags as being weak. For IAN, it's probably been 2 months with big red flags of it being weak comparative. And today was just them standing out with bullhorns and yelling, look how weak we are compared to the rest of the sector. IAN is down at the low. MedMen is down right back to its all-time low. And again, you just have to compare it to its peers. And then just look at my screen. So here's my screen. Here's USMJ, 3% on OH, Cureleaf 1.8%, CWeb 3.4%. So there's green there. The TRUL 2.75. It's nothing huge, but it's green. And then you look at IAN and MedMen, and it stands out so glaringly, 9.5% and 6%. It's just very different with what's going on with the rest of the sector. Yes, the sector is absolutely weak, but something is a lot weaker in those two individual names. Cryptocurrency. Bitcoin saw another leg down. I was very interested in buying this leg down because the RSI on the daily is now down in the teens, right at about 20. So the fact that we have not cooled off the daily RSI had me enter positions. Because I was traveling today and not at my computer, my positions had more space in between them, my bids. So if I had a bid and I had a bid at 78.11, if I were at my computer, my bids would have been 78, 77, 76. Because I was not at my computer and I knew it would be maybe 3-4 hours before I would be able to check in, it was 78, 76, 74. I put more space. That keeps me more conservative. So I did get a fill at 78. I do still have bids set in case we see continuation. And I'm going to keep filling bids as long as the daily RSI is this oversold. And I will be looking to sell on a bounce for a daily lower high. At this point on the 4-hour time frame, We were looking for bears to enter their positions on a 4-hour lower high. So congrats to any bears that entered, between 83 and 86. And then we dropped down to 77. Significant gains to be had there. At this point, what did I say in the last video? At this point, I would need a 4-hour lower high for a bearish entry. At this point, I would need a daily lower high for a bearish entry because I do expect that the bulls will get over 4-hour exponential resistance sometime within the next day or two. And then we zoom out and look for the daily lower high to be set. So the bulls have to hold the low of 81.60. Nope, that's not the low. 77.12, and then break the high of the bounce 81.66 to shift short-term momentum. And looking at that on the hourly time frame, exponential resistance, rejecting the price, have to change the trend. We haven't changed the hourly trend yet. So I have to hold 77.12 and break 81.65. I got an ETH order filled as well. Had a bid down at 155.10. That filled and up nicely at this point. And it's the kind of situation where I could take a 2-day maker on both of these positions, or I could let this bounce try and play out longer because the Bitcoin daily RSI is oversold, so beat up. And my decision is, at this point, it's about just over a quarter of my capital for cryptocurrency is deployed in those positions. And because I do have so much capital left, like I said, I would happily enter more in the low 7,000s for Bitcoin and in the 1,000 or the 140s for Ethereum if we do drop down. Ethereum has the 4-hour exponential resistance. We need trend changes, and then we're just going to zoom out and look for daily lower highs, and I would scale out my positions for those daily lower highs to lock in those gains. That's where we stand overall. Hope you had a good day. Not going to be around much. I'll put out a couple videos this weekend, but again, won't be the usual regimented robotic routine. Do good things, and we'll see you soon. And I'll have a whole bunch of good footage, hopefully, for the next couple weeks for end of videos, but nothing tonight.